Hey everybody, Rob Maurer here. Welcome back to Tesla Daily. Hope everybody had a great weekend. Today we are talking about a new Elon Musk interview. We've also got an update on the production rate of Giga Berlin, news out of China, the US, some news on charging, and a couple other items as well. Really nice day in the markets today to start the week off. Tesla today up 9.4% to close at $711.11. The Nasdaq up 2.5%. So while Tesla did trail off a little bit towards the end of the day, still the third best performance so far this year and the fourth best day in the last 12 months. And this was on relatively high volume today too, with over 40 million shares of Tesla trading hands. I think days like today where the stock shoots up when there's not really all that much news are really great times to check in on your own psychology, because a lot of times positive days like today can bring back a lot of the bullish feelings on a stock that maybe weren't there a few days ago, even though not really all that much has actually changed. The point isn't that those things are invalid, it's just a reflection on how feelings and sentiment can amplify what's actually going on in the market. Those sorts of feelings work just as strongly, if not stronger, on the way down. So really the point is that if you're recognizing those feelings on the way up, make sure you're recognizing them on the way down and not overreacting in either case. I only say that because I think that we have seen a lot of that in the last few months. All right, moving on from that, I want to start off with an update on Giga Berlin. This was announced by Tesla on Friday, but after our episode, so I want to catch up here. Tesla announced that last week, Giga Berlin produced 1,000 vehicles over the course of the week. Elon had previously alluded that they were getting close to this rate, so good to have that confirmation. It's an encouraging milestone, and historically, we have seen Tesla go on to continue to ramp very quickly from this point. Of course, the last ramp of an entirely new factory that we have to compare to would have been Giga Shanghai. So I dug through some of my old charts here for comparison's sake, and the Shanghai ramp was a little bit funky because we had the Chinese New Year in the middle of it, we had COVID interruptions, so there were a couple of periods during that ramp where the factory was closed. In this chart, I had excluded those periods, so it's something to keep in mind, but Shanghai started production basically in December of 2019 and then ramped up in Q1 to hit an average production rate of about 1,500 vehicles per week, excluding those couple of weeks of factory shutdowns. Took them about 3 more months to double from there, and then about 6 more months to double again up to 5,000 per week and hitting that true level of volume production basically within a year. So we're still pretty early in the story for Giga Berlin, but if we kind of plot that in comparison here, Berlin right now is looking to be a fair amount behind the pace of the production ramp from Shanghai, even if we consider late March as the start of true production, which actually gave Tesla quite a bit of time for trial production before that as they awaited final permitting. So for this quarter, Tesla will probably average a decent amount below 1,000 per week over the entirety of the quarter, since they're just now hitting that rate. That's what we've got plotted here. I definitely think it's fair to be a little bit disappointed in this, but there are still a lot of outstanding questions that need to be answered. How much of this slow ramp has been due to supply constraints? And the biggest question of all, where do things go from here? Is this an indication that the ramp will continue to be slower, or will Tesla catch up and it's just a delayed curve by 3 months or something, in which case, who really cares? To get a really solid answer on that, it's going to be another 3 or 4 months at least. And once we have that answer, that will inform how forecasts shape out for next year to a large degree. Looking at the Shanghai ramp, I think the expectations would be for Berlin to at least double this production rate over the next 3 months. Keeping an eye on that is much more important to where Tesla as a stock goes than anything in the Q2 results, in my opinion. Maybe margin being the exception. So something we'll continue to keep a close eye on. By the way, for Q2 and for the rest of the year, I did update my forecast this weekend based on this information and other things like the Bitcoin impairment. So that is now out for annual members on shareloft.com. And of course, we'll go through deliveries for Q2 and earnings for Q2 like we normally do on the podcast later on. All right, next we're going to walk through the highlights from a new Elon Musk interview at the Qatar Economic Forum. This was hosted by Bloomberg, a pretty quick 20-minute rapid-fire interview here. I'll put a link that I was able to find to the video in the description today. We'll start off with the Tesla-specific comments, and one that I had to kind of laugh at was Bloomberg talking about forecasts for Volkswagen to pass Tesla in EV sales by as early as 2024. And Elon kind of chuckled and said, "Wasn't that your guys' forecast?" And then he said, quote, "I would not agree with that forecast. No," end quote. I'm not sure exactly what caused this to get so much attention over this weekend, but even before this interview, it seemed like there were a ton of articles that had covered this as an offshoot of Bloomberg's original report, which came out on June 14th. The gist of that report was Bloomberg's own forecast for EV sales through 2025 by brand. I thought maybe this was an analyst consensus number, but Bloomberg says that the BI report specifically forecasts automakers' battery electric vehicle sales up to 2025, so I think it's just their own forecast. And they have Volkswagen at slightly above 2 million for 2024, and Tesla just below them, but also slightly above 2 million, which is pretty funny because Tesla's actual production capacity in Q4 this year, 2022, will probably be at about that level, and if not, certainly would be within 6 months. So they're basically projecting a doubling for Volkswagen and basically no growth for Tesla. Sure, great forecast. I'll echo Elon there and say that I would not agree with that forecast either. Anyway, Elon noted that from a Tesla perspective, they don't really care about other manufacturers or competitors. Their constraints are much more raw materials and being able to scale up production. They're not constrained by what competition is doing. The next Tesla-related point was on layoffs. So Elon clarified here that reducing salaried employees by 10% would happen over the next 3 months or so. He said that Tesla is about 2/3 hourly employees and 1/3 salary, so about a 3 to 3.5% reduction in total headcount. Some media outlets are trying to spin this as new information, but it's not. If you go back to our episode on layoffs, we talked about this exact thing. And Elon again re-emphasized that total headcount for Tesla would continue to grow. Basically, they just got too overstaffed, growing too quickly in some specific salaried areas. Next, he was asked about the Tesla bot. This might be the most interesting part. He said that they hope to have a bot prototype by AI Day 2, and that, quote, "I think we are tracking to that point, and there will be a few other exciting things that we talk about at the Tesla AI Day," end quote. So Elon had mentioned wanting to have a prototype ready by AI Day. Good to see that they are still tracking towards that. And we'll wait to see what those other exciting things might be. I would imagine we'll have some sort of an update on FSD, probably Dojo, and anybody's guess beyond that. Elon was also asked about cryptocurrency, and of course, this affects Tesla because of Bitcoin impairments. About Bitcoin, Elon did say, and emphasis mine here, quote, "It is a small percentage of our total cash or near cash assets," end quote. So he's using present tense there, which to me implies that Tesla is still holding its Bitcoin position. I know some people had hoped that maybe Tesla had sold it off before the dip, but to me, it sounds like Tesla does still have their Bitcoin. So maybe they sold a part of it. My guess is not. Elon did also note that he does intend to continue to support Doge. A couple of other quick general points. Elon did say about a recession that at some point a recession is inevitable. That wasn't really a reflection on where we're at today, just basically stating a fact that, hey, recessions come around sometime. But he did say that recession in the near term is, quote, "more likely than not," end quote. Elon was also, of course, asked about politics and specifically if he would vote for Trump. He said he was undecided on that election. He also was asked about his super moderate super PAC, and he said he might do $25 million for that super PAC. They talked quite a bit about Twitter. We'll sum that up really quickly here. He said there are still a few unresolved matters, still waiting for a resolution on bots, the question of the debt portion of the round, if that will come together, and then a shareholder vote. Of course, that is still contingent. On the question of whether or not he would be CEO, he again said doesn't really matter, but he would drive the product. And to wrap up with the interview and then also with Twitter, we did have another announcement from Twitter today in their proxy statement that their board of directors has unanimously determined that the merger agreement is advisable, so they are recommending shareholders vote for it. I think for the most part that had pretty much already been stated, so no surprise there. All right, next I want to spend a couple of minutes on Tesla in China. Over the weekend, we've had some numbers come out, and I think they're causing a little bit of confusion. This is the number of Teslas insured over the last week. So Moneyball on Twitter reported that from June 13th to June 19th, there were about 18,000 made in China vehicles insured. As we can see in the tweet, the previous week, June 6th through June 12th, had been 18,200. And if we go back 1 week further, May 30th through June 5th, that was just under 10,000. So 2 points I want to make on this. One, I've previously made insured units. That's not necessarily the exact same thing as sales or as deliveries. I haven't tracked insured units historically, but it is a distinct metric from the CPCA reported sales that we get. If those numbers were identical, I don't see any reason why they would differentiate them. So it's important to understand that those are not necessarily interchangeable, and there's likely some shifting in time between a sale and an insured unit. And then the other more important point is that for such short periods of time, like a few weeks, insured units doesn't necessarily tell us much about production because vehicles can lag in terms of when they're produced to when they're delivered. Of course, we care the most about production. That's most informative about the situation going forward. So this is particularly important to understand for June because in April and May, Tesla produced more than 10,500 vehicles more than they delivered. That means that June deliveries or insured units, whatever, those should all be outpacing production, likely in a pretty significant degree. So I've mentioned this before, but just be very careful when using any numbers like this to try to learn anything about production. And then the other point of clarification I want to make here is on a tweet that I saw that got a lot of attention. This was again from Chris Zhang, who tweeted this morning that as of June 19th, Tesla China delivered 46,012 units during the month. This is not accurate because if we go back and we look at those tweets from Moneyball, we add up those 3 weeks, that total insured units came out to 46,012 units. So we're talking about insured units here, not deliveries, and that also included May 30th and May 31st. So if you're going to try to do any extrapolation from that, you need to at least take off probably 2,000 or 3,000 units to account for those 2 days in May. And again, remember, these are insured units, not necessarily deliveries or certainly not production. So hopefully that helps clarify what's going on there a little bit. And then on production, we talked last week about the rumor from Wuwa that Tesla was hitting 3,000 vehicles per day. I did a little bit more digging on that, and my understanding is that Tesla is right now at about 2,700 per day. Wouldn't get to 3,000 until they do the upgrades, which are scheduled for July. Still, even at 2,700 per day, if Tesla can maintain that throughout the month, that should still lead to some upside to that 71,000 vehicle production target that we had heard previously. All right, moving on from China and back over to the US, we've got an update from Cars.com on their American-made index. Of course, the Model 3 topped this list last year, and it has been supplanted, but it's been supplanted by the Tesla Model Y. So, per Cars.com research, the Model Y and the Model 3 are the two most American-made vehicles in the country. The Lincoln Corsair is number 3, and I guess the fittingly named Honda Passport is number 4. Then we've got the X and the S at 5 and 6. So, nice to see, and would be even nicer to see Tesla get some credit for it. All right, last few stories here. First, we've got an update on the new Texas-made Model Y. Of course, we know the listed 0 to 60 on that vehicle is 5.0 seconds. According to spoken reviews on YouTube, Tesla is offering the acceleration boost for this vehicle, although the app says that it would take the acceleration from 4.8 seconds to 4.2 seconds, so it doesn't necessarily match up. Could be an error here. Maybe it goes to 4.2, maybe it goes to 4.4, maybe it's not even actually being offered at all, but we should find out soon. Spoken Reviews said that they are going to test their 0 to 60 before and then try to get the upgrade and see what that does after. So more to come on that. And then we've also got more news on the Megacharger at the Frito-Lay facility. They're in Modesto, California. TSLA this time got some up-close photos of the Megacharger so we can see the connector. Some of the electrical specifications here, Tesla says there are 4 750 kilowatt Megachargers. So I guess for at least this station, that would appear to be their power output. And we've also got another piece of news on charging here from TSLA. They are reporting that a new plan from the Texas Department of Transportation is setting aside $408 million for EV charging infrastructure over the next 5 years. Their intent seems similar to the federal plans that we had discussed. They're looking to build charging infrastructure every 50 miles along major interstate routes. All right, last two really quick things here then. IDRA has announced that they are extending their open house 2 weeks for the 9,000 ton Gigapress. So I guess add a couple more weeks on to when Tesla could receive that at the earliest. That would mean we're probably now looking at sometime in October, again at the earliest. And then lastly, last week we had talked about the design company von Holzhausen, run by Franz von Holzhausen, Tesla's chief designer's wife, teasing a caramel interior for the Model S. That is going to be an aftermarket option in partnership with Unplugged Performance. So no change to the design studio coming there, just wanted to close that loop. That package will start at $30,000. All right, so with that, we'll close it out for today. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. Also find me on Twitter at Tesla Podcast. And we'll see you tomorrow for the Wednesday, June 22nd episode of Tesla Daily. Thank you.